Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. Around the horn, we shall travel to make the introductions. Mr. Cory, Edge of Edge Realty. How you doing, Big C?
Doing fantastic, sir. How are you?
Fantastic myself. Thank you. Dwight Millard, Highlands Mortgage. How are you, brother?
A little sleepy, John. A little sleepy.
Did you stay up too late watching the World Series?
I did. Yeah. I grew up watching the Dodgers, but,
we all did.
So I didn't make it. I didn't make it like you.
Off here. Yeah, you and I chatted off here. We both, I think, went to bed about the same time, about 9 o'clock, and it went to, 11:45 or something. It's like, okay, do I get up in the morning or do I be responsible and go to bed at my normal 9 o'clock, and I'll read about it. And that's, of course, what I chose to do. But yeah, what a game. It'd be interesting. There are going to be some tired players tonight.
Oh yeah. It'll be fun.
Good stuff. Did you make it, Cory? Did you watch the whole thing?
I don't watch baseball.
You don't?
No.
Did not know that. Okay.
I don't know anything about it. I told Dwight, I can't make it through a regular baseball game, so one that goes 18 innings sounds horrible to me.
I know. That's for sure.
But I would have been asleep by 7:30, so I wouldn't even have seen that.
Well, I didn't say that I didn't fall asleep on the couch and missed a couple of innings towards the end there. So yeah, I'm with you. About 7:30, 8 o'clock, yeah, I start closing. That's for sure. Alrighty, folks, let me tell you what we have lined up. Another day. Dwight. What kind of day was it today?
There you go, John. Another record-setting day.
There you go. We need to make sure we record that for when things get lousy. We can just replay that and reminisce on the good old days. It was indeed another record-setting day today. We're going to tell you, of course, what happened in the market, and then we're going to get into our real estate topic for this afternoon. Folks, many of you, America across the board, are sitting on trillions of dollars of home equity. We've discussed this many times on this program. So I guess we can kind of say we're asset rich and cash poor, right? On the flip side of the equation, you've got the retiree that we're going to focus on. You got the retiree that's going, yeah, my house is paid in full, or I've got a substantial sum of equity sitting in there, but it does no good for me unless it produces cash flow. I, as a retiree, need cash flow. Now, of course, you have things like reverse mortgages, etc., but we're going to go beyond the scope of that. This afternoon, what the boys are going to be doing is talking to us about this, how we can turn our equity in our homes into what we like to call real income. We're going to walk through the HELOCs, the downsizing plays, and of course, rental strategies, utilizing the home equity, along with, of course, the major risks that if you don't do it properly, you can really have a bad outcome, right? And I want to preface this by saying by no means are we recommending taking equity out of your home and going out and blowing it on stupid things like boats and quads and so many things that we've all heard the disaster stories on. No, we're talking about, again, taking something that's not making you any money, the equity in your home, and turning it into, hopefully, a strategy that is going to produce income for you. Cory, follow up on that.
Yeah, and this is I'm sure you have more discussions than Dwight and I do, but even in my edge of the world, I have these discussions all the time. And it seems to be a common theme where people have worked their whole lives. A lot of times when they get to this point, maybe one of the spouses has passed. So you've got a single spouse left. And they're sitting on a ton of asset value, but maybe they had some income sources, Social Security, different pensions, those things. But now with inflation and everything else, it just doesn't make it anymore. And so, yeah, it's kind of sad when you hear about it. And then we've talked about it before where you get, unfortunately, sometimes some kids get involved and they don't want them selling these assets because they want to inherit them someday. And so, yeah, I think it's a timely subject to talk about how you can use this untapped equity correctly and safely to at least live out the rest of your years in the way that you should be.
That's right. Amen. Dwight, before I turn it over to you, just to your point, Cory, and I've shared this story many times, and I'll just briefly mention it once again, where we come across it a lot with clients. You're absolutely right. This is a very common conversation we have because, again, clients are hiring us to grow their assets and to produce cash flow, right? That's the main reason they hire us. But where this gets to be really tough and where we've utilized home equity to produce retirement cash flow is the following scenario. Guy retires, and I'm going to pick on LAPD and LA County Sheriffs. We have a bunch of them that live in Northern Nevada. These guys have these careers. They retire young, 50, 55. They see $8,000, $9,000 a month pensions. Unfortunately, because of the career, many of them end in divorce. So they end up retiring in their early 50s, obviously many years left ahead of them, but they've got divorced. X takes half the money, half the pension, or half the lump sum. So when they retire, guess what? They're single. Still, again, $8,000, $9,000 pension I see all of the time. So they retire out of LA. They come to Nevada, no taxes, living on $8,000, $9,000 a month. They're single. They meet someone, they fall in love, they get married. Well, that new couple now is used to living off of that $8,000 to $9,000 a month. Husband ends up dying first. Now the wife's like, oh, you know what? I miss, Frank, but hey, I'm doing pretty good financially. Until she realizes that $8,000 isn't in the bank account on the 15th of the month. Why? Because Frank chose a single life pension. We see it in the state of Nevada, of course, with PERS, right? You can take it either on your life or yours and your spouse's life. Well, when you're single, you're going to go, I'm not going to take a joint life, right? Which pays me less because I don't have anybody in my life. But once you, in many cases, not always, but many cases, you can never change that election. So when they get remarried, they're being paid the highest amount, which is single life. And when they die, it stops. It's down to zero. Well, guess what? Guess who gets to deal with that? We do, right? So now that widow comes in and goes, what in the world do I do? How much more can I take out of my investments with you to make up that $8,000 loss? And, frankly, you need a significant sum of money, north of $1 million, to make up that $8,000 a month loss. And so we've got to be the bearer of bad news and say, I'm sorry, you can't. But what else can we do? We can look at things like home equity and, all kinds of other strategies that we utilize. But it's a real life scenario, folks. And that's why I think, like you said, Cory, this is a great timing of this show, because I also was thinking about this from the standpoint, we've got the interest rate decision tomorrow. We're all convinced that the Fed is going to give us a 0.25% cut. We're convinced that December is going to be another 0.25%. And now the predictions are calling for anywhere between 2 to 3 in 2026. So now, guys, guess what? Not only your business is going to be skyrocketing, but now people are really going to be going, is it wise for me to have, I'll pick a number, $500,000 equity sitting in my home doing nothing when I can go to Dwight, take out a home equity line of credit, interest only for, 10 years and pay 2.5%, 3%, 4% interest. And then when I can turn around and invest that money into another rental property or something along those lines, I think a lot of people, guys, are going to be thinking about that as these rates come down. Dwight, now you.
But no, John, absolutely. And if you're sitting there with massive credit cards and you've got equity in your house, something's not right. But I think what people were afraid of is they don't understand it. So that's why this topic, of different ways to utilize it is perfect. Yeah, there's lots of ways to take out the equity and apply it to use. And you're just building leverage, right? You're just going to take it, you're going to put a little bit down on a property. And so it's a fantastic tool. And it's getting more popular now because, John, the prime rate is coming down, and a lot of your equity lines are tied to the prime rate. So they'd be prime rate. And just real quick, it used to be prime rate plus they added a whole lot of margin to it. Well, that's gone away now too. So
Really?
It's gotten very friendly. I mean, it's a very friendly environment out there right now for the HELOCs. So, and they're not, I don't think in the HELOC world, be careful what you say, but they're not coming out with a lot of risk position, but we'll get into it, and people will see how beneficial it can be.
Absolutely. All right. So once again, our topic, how to turn home equity into retirement cash flow. So we'll get to that momentarily. Let me get the stock market side going for you. As Dwight indicated, a record-setting day for the Dow, for the NASDAQ, and the S&P 500. One of the driving forces, it was Nvidia. My goodness, Nvidia was on fire today. Stock soared $9.54, 4.98%. Closed above the $200 mark finally, which we haven't seen since the stock had a split months ago. $1.03. Big wave of developments that came out of the company's GPU technology conference. Nvidia captured this record high, again, rising past this $200 mark for the first time since the stock split. Their CEO, Jensen Huang, said the company has over, you ready for this, guys? $500 billion, $500 billion, $500 billion in chip orders just through the year 2026 for its Blackwell and early Rubin chips. Mr. Huang also stated that Blackwell chips are now being manufactured in AZ, Arizona. How do you like that? So that surge in Nvidia, rising tides lift all boats, brought along other companies. Nokia, 22.17% gain, up $1.41 to $7.77. Let's go back to Nvidia. Why did Nokia shoot up? Nvidia announced it's going to take a $1 billion equity stake in Nokia. Two companies are going to collaborate on the launch of an AI-native 5G Advanced and G network on Nvidia platforms. Super Microcomputer up 1.5%. CrowdStrike up $17.24. Palantir up about 42 cents, among the other names that traded higher after the mention of this conference with Nvidia. Microsoft was a star today, $10.55 increase, 1.98%, 542.07. They announced plans for its continued partnership with OpenAI, of course, the parent of ChatGPT. Tesla, another strong day, $8.13. Amazon, which let go of 13,000 employees and their 30,000 corporate employee headquarters or positions. So 13,000 of the 30,000 got permanent job loss notices today, unfortunately. Stock went up $2.28, a 1% gain to $229.25. Williams helped the Dow out, $18.49 gain. Strong earnings report, both top line and bottom line. 5.5% gain for SHW, closing at $354.57. Nucor on the steel side, they beat earnings expectation. They shot up $7.88 to $152.04. I mean, the list just goes on. And all this, again, ahead of the Fed interest rate decision tomorrow, followed by the press conference of Jerome Powell. Where do we sit on a year-to-date basis? Hey, guys, I hope I make you jealous in the real estate world. How about these numbers? NASDAQ's now up 23.4% year-to-date. S&P's up 17.2%. Russell 2000 up 12.4%. And the Dow Jones Industrial Average a 12.1% gain year-to-date. And we still have another 2 months to go. All right, you're up to date on the market. We'll come back at the interest rate side, mortgage rates, the commodities, etc. Then get into our topic once again, how to turn equity, home equity that is, into retirement cash flow with Cory and Dwight. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage, Cory, Edge of Edge Realty. Thanks to Cory, I stand corrected. Sometimes the brain works faster than the mouth. When I said the amount of job losses at Amazon, so it was 14,000, but it was supposed to be 30,000. But today they announced 14,000. The 30,000 is roughly, little over 10 or a little less than 10% of their corporate workforce. They had about 334,000 in the last filing of the corporate workforce. So 14,000 sounds like a lot percentage wise, not that much, but a couple $1 billion a year savings. And then Cory brought up another great point at the break that I should have mentioned. UPS today announced 48,000 jobs going by the wayside in management. 48,000. Guys, especially you and I, Dwight, growing up, remember, it was our goal to always get into management, right? Mm-hmm. Because that was the safe spot. Not only did you make more money, but if there was ever going to be a layoff, usually the managers weren't the ones to go. It was always the rank and file. Right. It's not the case anymore. No. It's like, because of AI, they're getting rid of the management positions. They're the first one to go, as we saw with Amazon and UPS today. Yeah, absolutely, John. And that's what, on any given day, right, you could be next. And there is no safe haven right now. And it's really sad, because we are talking off air. A lot of these jobs aren't coming back. I mean, these people got to go find. These aren't layoffs, folks. These are job eliminations. That's kudos to you and your innovative mind about getting into the AI. And you do that Monday show. You got to reinvent yourself. Yeah, and you do. I mean, it's unfortunate. It's hard to reinvent right now, because what do you reinvent to? Yeah. I guess, once you're a salesman, you're always a salesman. So that's probably the saving grace the three of us have. I mean, I just know how to sell. Yeah. So do you. Well, so does Cory. Yeah. Yesterday, when I had my brother, Dr. Sanchez, the AI doctor, on the show, as we do each and every Monday, to your point, Dwight, we were talking about, what are the risks and the rewards of a solo, we call them the solo AIpreneur, right? But I was blown away. The latest stat that we could find was 2022. And you think about it, AI was really just starting to come around. But there were hundreds of thousands of solopreneurs bringing in $1 trillion into the economy in 2022. And this is where we're working on a programs, not to let the cat out of the bag, that we're going to be announcing probably in the next couple of weeks, where we're going to teach people how to get into their own business as a solopreneur. Because again, guys, as we discussed on the show, and please go back and listen to our podcast yesterday. And by the way, we did a special podcast at our other website, podcastersofamerica.com, where we went into great depth. It was about a little over half-hour interview where we went into great depth about the solopreneur, the risks, the rewards, etc. Guys, this isn't going to change. This is only going to get worse. I saw a graphic show up yesterday on CNBC when the news came out regarding Amazon. And this graphic, guys, showed the logos of all of the corporations. I shouldn't say all, but it took up the whole screen. Fortune 500 corporations that have announced layoffs this year. And I'm going to guess there's probably 20, 30, 40 logos on there. It was I'm like, my God, I forgot about that one. And oh yeah, Microsoft laid off thousands of them. It's mind boggling. And it is scary to, like you said, trying to figure out what you're going to do. And I think one thing people have learned, of course, in this government shutdown, the old safe haven of a government job is no longer safe. Things can happen due to politics, et cetera. So yeah, it is time to start sharpening the skills and looking at other things to make money. The great thing is like we said on the show yesterday, I literally could start if Dwight came to me and said, John, I lost my job. Well, I've already told Dwight if that ever happens with him, he's coming to work for me. I've already made him an offer that he hasn't accepted yet, but I'm not going to give up because I do want him as an employee of Sanchez, not an employee, but a partner of Sanchez Capital Management, because he is 1 in a million. So I will get my way one way or the other, Dwight. I always do. But if Dwight came to me tomorrow and said, I just got laid off or whatever the case is, first thing I'd do is I'd sit down with him with Chat GPT or Copilot, and we literally, Dwight could have a business ready for you in 2 hours. We'd have the entire marketing plan, the pro formas. This article that we referenced yesterday during the show, one gentleman that was interviewed was a work for the SBA, right? The Small Business Administration. And he goes, what I'm seeing with people, he goes, they're writing their business plan literally in less than a half hour. And this business plan, through AI, and this business plan is comprehensive enough that we will issue a loan based upon the AI generated business plan. And I mean, that is the remarkable thing about it is, again, you can, and I'll give you my brother's website again to get his new ebook on this subject. But that's the incredible thing is you literally can have a business up and running. And again, I'm talking the financials, the marketing plan. It will write all your social media posts. You get a funnel going where it'll automatically send out your emails, your follow-up emails. It'll set appointments. It'll answer your phone. And so I think, guys, the bottom line is you can hear the inflection of my voice. I'm so excited about this because for the first time in history, one of my biggest passions has always been entrepreneurship. And for the first time in history, the barrier walls are now coming down, right? There's so many things that you can do. We shared another article yesterday. 4 kids dropped out of college. They're 22 years old. Yesterday, their company, I don't know if you saw the story, Cory, their company, AI related company, valued at $22 billion. In less than 2 years, dropping out of college. Let your imagination wander. There's a business that you can create. So unfortunately, if you do lose your job, bear with us. We're going to have some great programs for you to get you out there because
I was going to say, John, what's nice about what you present here, everybody can do it. Everybody's kind of on the same playing field. It's still kind of, you need to know some people sometimes, but you bring it to a front where people can just jump in and actively go. And that's it.
Right.
Yeah.
And again, the other great thing about it, for the first time, Dennis and I were talking right before the show as we're putting this program together. And for the first time in history, you get it. If you're coming out of the corporate world, you have to look at it completely different. Not everybody's designed to be a self-motivator, right, Cory? I mean, you and I, we've always been in business for ourselves. Trust me, I don't want anybody, nor do I need anybody to motivate me because I love what I do. I know you do. I know you do, Dwight. So some people don't, they're not that way. They're more followers than leaders. That's fine. Go try to find a job with somewhere else. But for those that go, you know what, for the first time in my life, I can work anywhere that I want to. And for the first time in history, you don't need to go rent, a $4,000 office space and have, 5 employees, $20,000 a week payroll and workers' comp and insurance and benefits. You can literally sit down with a laptop and a cell phone. And with AI, you can be in business in a matter of hours, anywhere you want. You want to travel? Great. Go get yourself a beautiful Mercedes-Benz Sprinter van for, 80, $100,000 and go travel the country. Throw Starlink on there and you can go sit in the middle of the woods and conduct business. When else in history has that ever happened? Right? So it's all a matter of how you perceive this. And again, we want to try to help people, soon to be able to do that because it's the way of the future, guys. We're only, we're talking baseball. This is really, I don't know if I can even say the first inning. Maybe we're in warm-up still compared as far as the layoffs that we predict are going to be coming in the next, I'm not talking 5-6 years. I'm talking the next 2 to 3 years. The amount that's going to be coming, it's going to be staggering. I heard a prediction, I don't know if you saw it, Cory, on CNBC today. I forget. It was from the Jefferies economist. And he said, we've got to get used to, we don't have any employment data right now, but he goes, when things start going and, give it a year or so, he says, I think you will see the normal unemployment rate is going to be minimum 5%, here we are a little over, high 2s, low 3s right now. Fed wants, 2% or so. You're going to see 5% unemployment because again, so many people are going to be losing their jobs, unfortunately, due to AI.
But is that, it's an interesting time because I totally agree with you. Now is the time where people can go in and do their own thing. But what you just said, 5% unemployment, then you want low rates, that'll get you low rates. But what is the payback for that? Is that recessionary or is that not recessionary because hopefully those people can transition?
That's the thing, because these people are transitioning to solopreneurship. and they're making 2 or 3 times what they made working for someone. And they've got freedom and they've got unlimited income producing power and on and on and on. I mean, again, not everybody's going to be a success, but the tools are there now. If you, the number one success that is never going to change in small business, you know it, Dwight, you know it, Cory, and I know it. And that is grit, right? Find something you're passionate about and don't let anybody talk you out of it. I wish I had a dime for every person that said, when I left Smith Barney in 1999, went out on my own. Oh, you're going to fail. You don't have a big Wall Street name. Well, really? Okay. I think I've done okay. And most of those guys got washed out of the business, all my quote friends back then. But all the people that have told me over my life that a business I was going to do would never be a success. Again, kind of like an athlete, they say, oh, you're no good. You're too fat. You're too slow, whatever. Use that as a motivating force. But if you just find with 2 ingredients, find what you're passionate about, number 1, and number 2, don't give up and just keep pushing through and you will be a success. I wish so bad I had the tools of AI when I've started my different businesses, 20 plus businesses over my lifetime. I wish I had the tools, right? It would take me weeks, if not months to write a business plan. Again, I can write one at this commercial break for someone. I really could with AI. It's mind boggling. It really is. And then Cory, the challenge that all 3 of us have as far as people that want to get into our industry, all of our industries require licenses, right? But think about the millions of businesses that don't require a license. There's no barriers to entry. It's all a matter of how hard you want to work, how good you want to be as far as marketing. Sky's the limit from that point.
Absolutely.
All right. So how we finished today? I should have got this out about 10 minutes ago. 162 gain on the Dow to a close of 47,706. NASDAQ gain 190.80% gain, 23,827. S&P up 16.23% to a close of 6,890. Oil down $1.17, 60.16 a barrel. $37.70 loss on gold, 3,982.80. Mr. Millard, please bring us up to date on the mortgage side of things while I bring up my bond close.
Yeah, real quick, John. 30-year fixed rate according to Mortgage News Daily, 6.13. That's down 6 basis points from yesterday.
Come on, sub 6.
You gotta love the 15, 5.72.
Nice.
Here's, the arms, of course, are going away, right? But now you get into the government's 5.8 FHA and 5.9 VA. So, we're getting into an area, we're getting there where people who have those low interest rates, I think will start maybe getting out there and saying, okay, we'll see. We're going to test our ability that we always said the low 5s, maybe the high 4s, that you can buy down into it. So I think people will move.
Love it. Be prepared, boys. I think your floodgates are going to be opening soon. All right, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Veg Real Estate, Dwight Millard of Highlands Mortgage. Once again, a record-setting day with the Dow up 162, NASDAQ gain 190, S&P higher by 16. All right, you're looking for income. We're going to focus in on those of you that are a retiree or your cash flow planning for when the retirement comes. And we're talking about your equity. How can we turn our home equity into retirement cash flow? And again, I guess guys probably shouldn't have thrown the word retirement into this topic because everyone's looking for cash flow, no matter what, especially if, unfortunately, if you lost your job or something, as we were discussing before we went to break. Regardless of why you need the cash flow, how do we do it? So the boys have put together a great 8-point list of ways that we can start to look at generating cash flow from our primary residence. So Dwight, first couple points obviously are in your world as a lender. So let's start with your first point, Dwight, the HELOC for cash flow projects.
Yeah, the most obvious, John, is to use the equity that you have to go out and look at the ADU, a rental makeover, or an income property, right? Right now, they make it so friendly. You can go up on your primary residence. You can go up to 90% loan to value. All you need is a 680 credit score. They will go to a 70% on a non-owner occupied, so an investment property they'll now go. And a second home, they'll go to 85 and 700, 720 credit scores. Right now, it's prime plus anywhere from 1/4 to 1.5, just depends on your credit score and what you're taking out. But that prime is going to drop tomorrow probably to 7, right? Anticipation. So, the risk they say is that you've got a floating interest rate. So you can either tie it up for 5-year interest only or 10-year interest only, and then the remaining balance is paid out over 30 years. So fantastic way.
And that interest rate will adjust down
if the rates go
prime
down.
drops.
Yeah.
Right.
Yep. So it's then when you get ready to fix it up, it's going to take an average. So it's reasonable to where the rates have been. So it's fantastic. Ask Cory, he had 3 at one time. Right, Cory?
And they all came from you.
Yeah, on the same house, John. Anyhow.
At a first, a second, a third,
Yeah,
before.
the other one's like, the old trustee, and that's the cash out refinance.
Well, before you
And
get to that, let me pause you before you get to that. Cory, I'm going to bring you into this conversation on point number one, the HELOC for a cash flow project. So as Dwight said, ADUs, right? That's where you build the little shack in the back, right? For rental income. Again, remind everybody what Reno just passed.
They are crafting, they're not completely done yet, but they are crafting the approvals for these accessory dwelling units. So they will be a reality in the very near future, probably. We don't know all the exact guidelines yet, but you'll be able to do them here.
I'm going to throw that in there.
The other question I have while we're on this topic, and Dwight, we haven't talked about these for so long, but there used to be a $500,000 cap, but a lot of these people that have equity now have way more than that. So is it still 500,000 cap on equity lines, or is that expanded also?
wait, on your primary, it will go to, actually, it goes to $1 million.
Wow.
With a 75, they're going to cut your equity back to 75% and a 720 FICO. So those aren't unreasonable terms for $1 million of HELOCs. So
I'll call you right after the show, Dwight.
Yeah, there you go. I'll get you 3 of them, Cory. 3 for 1.
I have some ADUs I need to build.
Yeah, I was going to say, yep, you got it. Well, the second point, Cory, I want to ask you on this HELOC for cash flow projects, the rental makeover, right? I mean, this can be a very wonderful use of unusable or uncash flow providing equity, where you take some out of your primary, and let's say you have a rental or you want to go get a rental and do a makeover, right? I mean, nothing's perfect when you buy it, or if you have an existing one, you go, yeah, I can add this and this, and I can obviously need to do the math. But how would you recommend in a rental makeover? What would be a good ROI, return on investment on our?
Well, and I was just going to get to that. Don't go fix up your rental nice and cute and just the way you want it, and then charge the same rent, because that doesn't make any sense. You have to have some kind of return on that. And obviously, to me, common sense, the return's got to be more than what the debt cost is. So if it can cover its debt, great. But hopefully, you're getting a little bit of bump. If the money's costing you 5%, but you're going to get a 7 to 10% bump on that in your rents, then that kind of makes sense. The other thing too with that, John, is you have to talk to your accountant, because when you're pulling money out of a primary to fix some investment, then you're going to want to write off all the interest from your primary. I'm not sure now you can still do all that stuff. You have to make sure that they understand what's going on, because you may have some not tax issues. It just may not be as beneficial as you think it would be.
Right. Don't get the write-off interest deduction that you wanted. Okay, great advice.
John, it's real important to point out on HELOC, it's very flexible, right? What you borrow is what you pay on. It goes, so you can, it's a fantastic way to manage it.
Yeah, it really is.
Well, and I know we're getting stuck on the first one, but we've all three always said this: government shutdown, 100,000 people getting fired today. Like, if you have the equity, go get $100,000 HELOC or 50,000, whatever. You don't have to spend it. It costs $100 a year to have it, but in case of an emergency, they're lifesavers.
They are. Like Dwight and I have worked together, Cory, as you all know, for many of our clients. He'll do exactly that, because we're adamant with our clients when they go into retirement, especially if they have the equity or the house is paid off. I go to them when we're doing their cash flow planning and retirement plan and go, look, you're going to call Dwight and you're going to get a whatever 100, 200,000. I mean, Dwight, we've done what, 250,000, I think, probably one of the largest line of credit. And they're like, no, my house is paid off. I'm like, exactly to your words, Cory. It's like, it doesn't cost you anything. Big deal. So you got a first trust deed back on your property that's paid in full. I don't care. But exactly as Cory said, something happens to you health-wise or whatever, you got that money there. And remember, folks, it's so much easier to qualify when you're still working versus trying to get that HELOC from Dwight when you are retired. Great point, boys. Great point. All right, Dwight, let's go to our second level, or second point, the cash out refinance for stability.
Yeah, so people kind of like the fixed rate kind, John, and now if rates start to come down a little bit, that may be more of an option to go in. Typically, you're limited to an 80% cash out with Fannie Freddie. So you just do the cash out. I mean, VA has theirs up to 100%. FHA has cash outs. You kind of know your product. I'm a big fan of the conventional, if that's your option, that or FHA. Veterans, you can look at different scenarios, but it just gives you that stability. You know what your monthly payment is.
Okay, perfect. Cory, let's squeeze in point number 3 before we go to break. As you put, downsize and invest the difference. Boy, we do this a lot with clients. I have been amazed. I've said this on the air these last couple of years, the amount of money that clients will call us all of a sudden and go, hey, I've got 300,000, 500,000. Where'd you get that from? Well, I just sold a house. I sold a rental, or I sold this, or I sold that. Or they're selling their primary and downsizing, and they have that excess cash. Let's talk about that one.
It's a great idea, right? Because again, unfortunately, when we're talking about these, one of the spouses passed away, the kids are gone, the house is too big. So you can downsize and not only get into a space that's more manageable, but you cut the landscape costs, you cut the electricity costs, you cut all your costs down. And then you have this lump sum left. And my proponent is always you can go into the investment market if you want to be a landlord. A lot of times these people at the point in their life, they don't want to be landlords.
Yes.
So I always recommend go see Jon, because now you can get the stability. Maybe you're not going to get as high of a return, but you know that check's going to be there every month, so you don't have to worry about it. And I've had clients, and still to this day, sometimes when you sell that primary, Jon, you don't have to rush back in and buy something right away. People get this thing like, oh, no, I can't rent, I can't. Well, if you're taking this is how I think at least, if you're taking this lump sum and you can go put it in something safe and it's paying you a bunch of money and you're going to take a little bit of that and pay rent, like this is all a financial maneuver. You don't have to own something. Listen, I've lost plenty of deals being honest with people. Like, why would you buy this? You're crazy. It's stupid. Why would you do it? And then they think about it like, yeah, you're right. That is stupid. So look at it as a financial picture.
You're right. Rarely do I ever see, Cory, when you send people over like that, rarely do I ever see them and they balk, like you said in the beginning, like, I don't want to be a renter. It's throwing money away. Rarely do I ever see them go 2 years later, 3 years later, hey, you know what? I really miss home ownership. Can I take my money out and I'm gonna go buy a $800,000 house? It never happens. They get so used to the simpler lifestyle, both from a productivity, like, geez, I don't have to do my lawn anymore, and they love the freedom of it. The bottom line. So that's a great point that you mentioned. And we have a rule in our firm. If we always ask clients where this money come from, and if the sale of the house, first question out of our mouth is, do you plan on going into buying another home again? If the answer is yes, we will do very, very conservative investments where there's really very, very little risk to it. I will not put it in the stock market because, again, last thing we want to have happen is a stock market correction. They're ready to go buy a house and, they're down 5 or 10%. That can happen at any time. So you always be really, really honest with your advisor, how you're going to use this money going forward. But like I said, very few people that I've ever come across say after a couple of years of renting, oh, boy, I really missed, getting out there and mowing or, paying $300 a month for a garden.
Paying my real estate taxes. Yeah.
Real estate taxes, exactly. Yeah. Now let me write my $2,000 or $3,000 condo rental bill every month, and I'm going to go travel the rest of the time. So that's just the way it is. All right, we'll come back and talk about reverse mortgage strategy with Dwight. Let's wrap it up with Kristen Snow. She's in the Right Now Traffic Center. Kristen, welcome back to the Jon Sanchez Show on Newstalk 780 KOH. We're going to continue plowing through our topic: how to turn home equity into retirement cash flow. But first, let's get some phone numbers and contact information out of the way. Let's start with you, Dwight.
Yes,
Mr. Edge.
Sick.
Beautiful. Thank you, boys. All right, let's recap so far what we've talked about on our 8 talking strategies. You guys want to continue this on Thursday? Because we're definitely not going to get through our 8.
Yeah, sure.
All right, we'll do that. So let me recap since I have a little more time now, what we've talked about so far. All right, as Dwight said, the HELOC for the cash flow, you can use that HELOC equity to fund an ADU, rental makeover, income property, that type of thing. Your risk there, of course, floating rates that crush the cash flow if payments spike, which now we're going into a declining interest rate environment. Could it change? Sure. But right now, we're in a declining interest rate environment. Number 2, cash out refinance for stability. Lock in fixed payments while turning equity into the investable capital. Risk, of course, the higher rates mean math must be rock solid, which it always should be. That's why you need someone like Cory and Dwight to run the numbers. Number 3, downside and invest the difference. Sell the big house, buy the smaller, invest the remaining equity for retirement income. The risk there, the emotional attachment can sabotage your financial plans. Yes, I agree with that point, but at the same time, usually when people are at that point of their life where they like, I need to downsize, lost a spouse, or I live in a 5-bedroom house and we got 4 bedrooms closed all the time, that doesn't seem to be a major issue. Dwight, let's go to a fourth point: the reverse mortgage income strategy.
Yeah, absolutely. So this is for anybody 62 or older. Obviously, the older you are and the more equity you have, the more favorable the terms are. But what it does is it gives you the ability, Jon, to take the equity in your house and either get it as a lump sum and it's tax-free, or you can get it monthly paid out. So you turn that forward mortgage where you're paying out to a reverse and you're getting paid for your house. It stabilizes so many people that they lose an income or they lose, for different reasons. It allows them to stay in that house. And Jon, this is one of my favorite. The more you know, the more this becomes a very, very viable product.
Dwight, they're great. And again, as I've said many times, when we have the reverse mortgage discussion on this show, I was dead set against them for many years until I ended up referring a client over to you years ago, where she had a husband that started diminishing, had to go into assisted living. They couldn't afford it. One of your great employees handled the reverse mortgage and really saved those people. But there are downsides, and we can't get off the reverse mortgage topic without the downside. What are those?
Well, the biggest one is, John, if you don't have a payment, you get a lump sum each month, and your balance is going to increase a little bit, right? I mean, because there is an interest to the loan. The misnomer is that it's still your property, you still own it, and your heirs still have a right to it, right? They have basically 6 months with an extension of 6 months to sell or refinance it. But if you take
fees
the
are
08,
a big issue. Fees are a big issue. Fees are a big issue.
Are a big issue. It's an FHA product. You and I have talked about this, but this is where the market generates it. I don't know why the fees are so heavy, but again, they roll them into the cost of the loan. But you're right. That is probably the biggest Achilles heel, is the fees base of it. But
all right, folks. Well, we will continue on this topic again on Thursday. We only got halfway through. Excellent job, Cory. Excellent job, Dwight. We'll do it again tomorrow on the Jon Sanchez Show. Big Fed Interest Rate Day. Don't miss the show. God bless. Have a great afternoon.